So hey guys, and welcome back to the channel, and today we're back with a monthly refresh of our 4 automated Python strategies. So yeah, let's start with the main one, the best one that always performs. So how it works, for those of you who are new, every time, every 15th, so today we basically scrape Zacks, which is a stock research website. It has like ranks for stocks, and we scrape every US stock, so it's like over 6,000 stocks. We only keep the stocks that have rank 1 and 2, so those are strong buy and buy, and the rest we just discard. And every month we get about 700 total stocks that we store here, and then we review their performance. So yeah, you can see 709 stocks, and yeah, it's been a great month overall, but we always compare it to the S&P, so it's not like we're just saying, oh yeah, we had a great month. No, it's compared to S&P always. And yeah, our strategy performed 5.7% in 1 month, whereas the S&P, which is really good as well, 4%. So again, this strategy just it's been backtested for over 2 years live, by the way, not in a backtest, like live. We've been choosing them every single month. The history is there. I provide them for free on the website that we'll come to soon. And yeah, it's just a great strategy, always outperforming the S&P, and this month is no different. So onto 3 newer strategies. I say newer, but they're quite like they've been here for a while now. So the first one is the earnings one. So this one is more volatile. We try and predict stocks that will be earnings. So how it works is before earnings, we check that again. The Zacks rank is 1 and 2, but the key difference is this: the EPS percentage. That's basically the analyst's sort of percentage confidence that the stock will beat earnings. Of course, even if a stock beats earnings, it doesn't mean that it will go up, but that's the best we can do with the data we have. And then, yeah, we just make sure there's no look ahead bias, and that is like a future earning, right? We're buying before the actual earning is announced. And then, yeah, we again just compute the return over the month. This is lagged back 1 month, so that's when the S&P did poorly with Middle East tensions and all of that. So the S&P did like minus 1.5%, so still this is terrible compared to the S&P. But this is only one of our alternative 3 strategies that is actually beating the S&P. So yeah, I do trust this strategy. I actually use it daily, so I know how it works. I know how it performs. But yeah, unfortunately, just this month it wasn't the right month to predict earnings with all the sort of macro factors coming in. Then onto the dividends one. So this is a dividend capture strategy. If you don't know what that is, it's basically buying a stock before the X date and then selling in a month, hoping that the stock has gone up compared to its dividend yield. So say stock is trading at 100, it goes to X the next day, normally goes down like by its dividend. So say it pays a dividend of $2, it will go down to 98 on the X day, and then the next month you're basically hoping that goes above 98 basically. So you'll make a profit from the dividend and the loss, but the loss isn't as much as the dividend yield basically. So again, pretty simple strategy. Zacks rank 1 and 2. We also don't want tiny dividends, so we just look at stocks with a dividend yield over 2%. And then, yeah, again, it's just buying before the X8 and selling 1 month later. And again, this also lagged back, but still minus 3% compared to S&P, which is like minus 1.5, I think, for the 2 months prior. So yeah, not the best. And this strategy has been proven, or not proven, but there's a lot of literature on it. Dividend capture doesn't work reliably. Like it may work some months, but overall, it's not really a strategy you should employ. And finally, we have the earnings reversal. So this is the most interesting one, and I guess from my end, the most poorly implemented. First of all, we're not even looking at Zacks rank 1 and 2. That's the first problem. The second problem is that we filter stocks that beat earnings, but you want stocks that beat earnings and also went down on earnings. Right now, we're just looking at any stock that beat earnings, and we're just buying it. So yeah, there's a lot of literature about this. If stock beats earnings and it goes down, it's usually sort of an overreaction, or people were like expecting too much from that stock, and over the next month it will go up. There's a lot of mixed literature on it. It's not like certain, like nothing is certain in finance, right? And the stock market. But yeah, this one's the most poorly implemented in code. I mean, we have like all the data for it. I just need to implement it correctly. But I have like uni, I'm in final year, my final uni exam. So definitely like they end next month. So I guess because we do this every month, it will be in June. I will fix this and do the correct strategy. But again, this one has also underperformed. So all the alternative strategies underperforming the S&P when it had a bad return. So moving on to a website now. So yeah, this is the refresh. So this is the performance from last month. So you can see this was the lag back, right? I mean, we did badly, but the S&P did a bit better than us. Oh wow, it's actually down way more than I thought. Yeah, it's down like 2.98%. So wait, yeah, this one actually outperformed. I don't know why I got 1.5 from, and this one outperformed. So only the earnings one underperformed the S&P, but still by like a tiny bit of percentage. The two others outperformed, and it's still quite a big negative return. So you can't look too much into that. But okay, that's good to know. So yeah, when I refresh the website, it will be updated. So still the same version. So busy right now. I haven't had time to implement any features. There's quite a few feature requests as well, and quite a few things that I want to do. So again, this is for the current month, and yeah, we've had that sort of revival with the calming down of Middle East tensions and stuff. And yeah, 5% in a month is amazing. We're back to all-time highs on the monthly ZAC strategy, and the S&P is basically back to all-time highs as well while we've been tracking it. But again, like look at the gap. This is a gap over 2 years, and it's huge, right? It's nearly 20%. So you really can't complain. This strategy, it's been tested live. This is not a back test. Every month we have picked it, and the history is here. Like it does really well. So yeah, really good to see the monthly ZAC strategy compared to the S&P on its own. Then the dividend strategy, again, as I said, this one has not been performing well, and I didn't expect it to perform well, but we had the data on it, so why not track it? And again, yeah, it is underperforming currently. Again, these are newer strategies, so we've only been tracking them for about 9 months now. And then the earning strategy, this is only one of the alternatives that is doing well so far. Started slow and then had this huge upswing, but yeah, this month is the only strategy that actually underperformed, but still beating the S&P over the period we tracked it, so that's good. And then finally, we have the earnings reversal. This one again, it's not the proper way to implement it based on literature, based on papers. I need to just fix that basically, because right now we're just buying any stock that beat earnings, but maybe the stock beat earnings, it goes up like 30%. People are overreacting, hyping it up, and then over the next month it sort of calms down, goes back to maybe plus 20%. So we need to implement it properly, like in literature. Is if a stock beats earnings but goes down. So yeah, that's I guess future work for me. And then as I said, there's no new features. Again, the best stocks of 6,000. This will be updated. Well, the video is actually coming out later, like right now. I don't know if you can see the time on the screen, but yeah, it's like 4 p.m. right now, so markets aren't closed. But we update it every 15th on market close. So yeah, it says list last updated on the 15th, which is technically incorrect. Like right now, they're not updated, but I'll run the scraping overnight, and you'll have free access to all the new stocks for the month of April to May, and then in May, we'll test it again, do the same YouTube video as we have done every month for like over 2 years now. So yeah, that's it, I guess. I think I just want to show you, yeah, so test. I just want to show you, so this is my practice account on Trading212. And I just want to show you on the features that we already have. I mean, you guys, well, unless you're new, you guys all know what I've built. The website's free. But yeah, this is the one that people have been asking for. I mean, I always see this in forums, by the way. People want these heat maps at different time periods, so we have that. But yeah, dividends, once my uni is finished, I'll be working on this strategy. For some reason, people love like tracking dividends. Like, I get dividends. I'm quite young as well, so I'm not a dividend investor, but I get the appeal of them. But people just love having like every metric. So that's the next thing we'll be working on in quite a while, because my last exam is like late May, and then I start my graduate job not long after anyway, so I won't have too much time. But yeah, definitely more stuff coming, guys. If you have any features to request from Trading212 or just for stocks in general, maybe you trade like Interactive Brokers, wherever, you can request general features. But we do have a Trading212 API. Like sort of special connection that works at any account, practice account, real accounts that you saw. But yeah, that was a monthly refresh. Really good month for all our strategies except for the earnings one, really. So yeah, thanks for watching. That was a back test. See you next month. And remember, if you have any feature requests, I will get to them and comment down below any new ones.